Welcome to TradeNBI.com. This is John. This report is for the 11th of December. Well, we saw from Friday's action, the continuation, moving to new highs, closing just below it, but still up at that 100% from just before it made the new high. And not a whole lot of activity happening here pre-market at this particular stage, just slightly down. But you can see from an NBI reading, magenta is over yellow above the 33. It's all clean. Cyan remains under red. So even through the noise, we could see that nothing was going to change. DOC steel above that negative 13.5 and at the complete reset. So everything's still there for the rally to continue. And, had an interesting question about, how do you determine whether, trend is going to continue in that? And this is where we look at our shakeout gold. And as long as it continues to rise, even plateaued is fine. It's just when we start to see lower. Now, if we start seeing higher highs and we end up making a lower shakeout and then we start to see that gold, then we'll know that a reversal is imminent or about to take place. But at this particular stage, nothing to do. And this is quite a range between the 100% and 76 if we actually look at our target ranges there. You look at the 100% at 66 and the 76% there at 45.50. You got about 16-point range just sitting there, and that's pretty decent. As far as with the lower volatility, well, we've had an increase in volatility, but relative to some of the bigger moves, not so much. But a move back towards that 45 range, which has been a consistent support number, as well as it was previous resistance earlier on. Things are going to continue right in that. And the interesting part of it is that the NASDAQ had been a little bit softer coming back already to its 76%, so a bit more healthy from a full reset standpoint. More complicated from its DOC standpoint, but still green over cyan and cyan under red. So again, also not a problem. And the fact is that you have much more room on a shakeout reading here, though, that it has to move to get back above. Otherwise, you're going to end up with higher highs on lower shakeout. And if that rolls over, that would definitely be a signal that, at least from a NASDAQ standpoint, could be some difficulties there. But for now, everything's moving along, barring any kind of news. And all the news has been relatively positive. Not a whole lot going on. Oil's been soft. Treasuries are a bit out of whack with the lower yield. That certainly moves money back towards the market. They're outside where the Fed range is because they're expecting easing. But with the unemployment numbers and stuff that came, that's a bit more complicated to sell. The reality is, though, the bonus is lower oil. And, we've talked about this before. It's a driver of where future economic activity will be. And did it come at just the right time? Absolutely, because we're, already expecting some weakness going into the first quarter with the inflation numbers. So this takes a lot of that pressure off. It makes things a little bit easier. So not gloom and doom. Israel was talking about how they're getting close to the end of the situation there, and those all end up being positives. Lack of renewed conflict with adding funding for Russia, conflict in Ukraine, just means that there's stability. Within the uncertainty that exists within it. So all things being equal, and not a horrible situation. The euro just coming back to fill this monster positive extreme from before and supporting right off its 50%. So comfortable range. It's on the low side of where they particularly like the range between that, 112, 113 range to 106. Below that 106, I think, is where they end up starting to get a little bit concerned, and that becomes volatile. But again, the Eurozone's got its own problems, and it's just a relative measure of strength. Everyone talks about the dollar dying and imminent collapse, and it's like, no. Yes, there are problems, as you can see, that the arrangements with Iran, Russia, and Saudi Arabia and all those things, you've bifurcated the world now from a broad structural standpoint, and that will have its impact on the dollar going forward, but that's going to take a lot of time before that happens. And I think you even saw the United Arab Emirates and that trading outside of dollars and other currencies. So this becomes a question of homogeny around the world, and Well, that fade will have its impact over time. It's just something that is going to start to alter um, U.S. influence in that. And while those have broader implications, it's not something that's going to be an immediate effect. Gold filling back all of its positive extremes from the run up, and quite a significant pullback because, again, the inflation softening with oil, and again, it's a direct tie to it. We also see crypto. Bitcoin took a nice move back just to fill in the 70s. That's got a lot of positive extremes, though. I mean, when we go back, you're looking at all the way over to here. Now, we know that with crypto, it takes a lot longer for some of those to fill, but it's had a pretty decent run. So some of this pullback would be healthy. It's already filled back a big portion of it coming back through, but could have a little bit more sustained weakness. And obviously, if that yellow dips below the 33, that would be even stronger. We're seeing a whole lot of short moving here with the MBI white dipping all the way down, and you can see the complete reset from DOC steel. So as long as it remains negative below the negative 13.5, yes, it's going to be a negative, but as soon as it pops back above, that will be your first indicate of support. ETH suffered a little bit deeper decline in that, but that again fills positive extremes. So when you see that, it's sort of an effective opportunity, and that's why it bounced from there, because as soon as it filled those positive extremes, that became a nice buying opportunity. Some will argue that it was just filling the gap, didn't quite get there, but close enough, at least from a positive extreme standpoint, which is why it's much more effective from that standpoint. We look at the 50K, you can see just a nice ABC style move. We popped up, got close to 100%, returned to the 50%, turned around, found nice support there. There just really was never any heavy MBI white lead on any of this, and that's led to every little dip being an opportunity to capture a little bit lower price and continue to jump forward. So nothing to object to with that. Of course, I had to go to the 5-minute because my tick chart for 5K kept causing a shutdown, and no idea why. Just sometimes it does the update for the weekend, and it just causes me grief. But that's a whole different story. But you can see from Friday's action, popped up, filled back in, very healthy with that, filling all the positive extremes, and then accelerated from there. The uselessness of time as a indicator, but you can see from a 5-minute chart here going all the way through the open, we're pushing back up, getting close to parity at this particular stage now, only down a single since we've been doing the video, and so we're going to be pretty close to even to start the day. I would expect continuation of the trend of where it's at. Obviously, it'll be pretty clear for us. Hopefully, I'll get my 5K chart up. It's just nicer because, again, as I pointed out, time does not buy or sell anything, and so candle representations from time are less valuable than actual trades. So that's why we prefer the tick charts, or if you want to even have a Kase or something like that that builds off of actual trades versus just time, certainly more relevant. So keep that one in mind. But as always, if there's anything relevant, I will certainly put it up on our Skype chat. Have a good one. Trade well. We'll talk again later.